What is a sales tax? In the United States, when you go to the store to purchase something, let's say you go to purchase a t-shirt, you buy the t-shirt and when you go to the register to pay, you give them cash or a debit or a credit card and they give you a receipt. Have you ever took the time to take a look at the details of that receipt? Well, I did, and I noticed that at the end of each receipt, before the total is listed there is the subtotal of the purchase, and then there is an added sales tax. Well, a sales tax, it's a consumption tax imposed by the government on the sale of goods and services. A conventional sales tax is demanded at the point of sale, collected by the retailer, and then passed on to the government. A business is liable for sales taxes in a given state if it has a presence there, which it's also called a nexus. And I will explain in detail the possible types of nexus that a coaching business may have in the following lectures. But for now, just know that a presence can be a brick and mortar location or an employee of yours that's living in that state or an affiliate of your business or some other presence depending on the laws in that state. I will explain with the help of a product chain map that you have attached in your resources. So please print it and download it and follow along so you can understand it and you can in turn be able to explain it yourself. So conventional or retail sales taxes are only charged to the end user of a good or service. Because the majority of goods in modern economies pass through a number of stages in the manufacturing process, often handled by different entities, right? A significant amount of documentation, paperwork, it's necessary to prove who is ultimately liable for a sales tax. So let's look at an example of on that map. So we have a cow farmer which sells milk to a company that manufactures cheese and other milk products. To avoid paying the sales tax, the cheesemaker must obtain a resale certificate from the government saying that the cheesemaking business it's not the end user of that product. The cheesemaker then sells the products that he makes onto, let's say, a frozen food manufacturer. The frozen food business must also obtain a resale certificate saying that they are not the end user either. Finally, the food manufacturer sells the frozen foods they make to a grocery store and sometimes to a restaurant, which are also not end users. But when they sell the product, they will charge the customer, which is the end user, a sales tax along with the price of the frozen food or the prepared food. In Florida and many other states, prepared food sold in restaurants or in grocery stores is taxable. So let's take another example. Let's take a cotton t-shirt. A cotton farm sells the raw cotton to a company that makes different types of fibers. To avoid paying the sales tax, the fiber manufacturer must get a resale certificate from the government saying that they are not the end users of that cotton. They make the fiber from the raw cotton and they sell the fiber to a clothing manufacturer. Now, to avoid paying sales taxes, the clothing manufacturer must obtain a resale certificate from the government saying that they are not the end user of that product. They make t-shirts with that fiber and then they sell the t-shirts to a retailer. Finally, the retailer, it's not the end user either, but they sell the t-shirts to us, the consumers. And then when they sell it, they add the sales tax, which we must pay together with the price of the t-shirt. I hope these two examples make it clear as to what is happening in the manufacturing process in the US economy and how taxes are applied. Keep in mind that different states charge different sales taxes, which can often overlap when states and counties and municipalities each require their own sales taxes. And this happens especially in large metropolitan areas like New York City or Denver or Miami. LA. In general, sales taxes take a percentage of the price of goods sold. For example, a state might have a 4% sales tax, a county in that state has a 2% sales tax, and a city in that county has a 1.5% sales tax, which means that the residents of that city or anybody who goes to buy something there will pay 7.5% total in sales tax. Often, however, certain items are exempt from sales taxes, such as food. Exemptions can also apply below a certain threshold, such as, let's say, you're buying clothing for less than $200 or so. However, this does not mean that sellers and manufacturers never pay sales taxes. For example, if a company produces electronic goods, let's say, it will not pay sales tax on the components that it purchases to make those goods, but it will pay sales taxes on the purchase of, let's say, the safety equipment that they have and that's used by the staff. The equipment, it's not a direct part of the final product that they manufacture, so it's not exempt. The same with the shelves, the displays, the light fixtures, the pay terminals, and everything else we can see in a retail store or in a grocery store. That equipment, it's finalized product, and when the retail store or the grocery store are purchasing those fixtures, they were the final consumer and they paid sales tax on those. So the manufacturers, the retailers, the grocery stores are not totally exempt from paying sales taxes either. So here's a list of goods which are typically exempt from sales taxes, but things look like they will be changing soon in the United States. There are the goods purchased for resale that are exempt. The components or the ingredients purchased to create goods for sale, like the ingredients in a restaurant. The machinery and equipment that is directly used to create goods. The containers and the packaging used to ship goods for sale. In specific cases, a sales tax may be applied to the same item indefinitely. For example, a consumer might pay a sales tax on the purchase of a new car. At a later date, when someone else buys that car, he or she may also pay a sales tax on that same vehicle. And this will continue as many times as the vehicle is sold. Foreign visitors, the tourists coming to the United States, are often confused when sales tax is not included when they see the price on a good. For example, in Minnesota, in Pennsylvania, New York, Vermont, Massachusetts, New Jersey, they do not place sales taxes on clothing. The majority of jurisdictions exempt food and drugs from sales tax. Oregon, New Hampshire, Montana, and Delaware don't have a sales tax at all. Alaska has no state-level sales tax, but permits local jurisdictions to impose their own regulations, like each city and each county. Then we have Michigan, Maryland, Kentucky, and Idaho, which impose state-level taxes but do not permit the cities and localities to impose their own regulations. So each state is different. When the internet became a significant presence in the economy, it caused a number of challenges for tax authorities, and it still does. The online world made it possible for consumers to easily and often purchase goods from other states and now other countries, causing a huge confusion as to which tax rate was applicable to which goods. In 1992, the Supreme Court case Quill Corp versus North Dakota determined that states in the United States could not collect sales tax on goods sold over the internet unless the seller had a physical presence in that state. However, in June 2018, the Supreme Court overturned that decision, citing the fact that it's now much easier for internet-based retailers to determine where their buyers are located and therefore collect the correct sales taxes based on the buyer's location. So yes, the sales tax collected from you when you purchase something online, it's not based on the tax percentage of the state in which the online retailer has the headquarters, but it's based on where you live. And yes, we would be fools to believe that they don't know that. They clearly do, right? So this is the sales tax. This is in the United States. And next we are going to talk about the VAT tax that happens to be used in most of developed countries all over the world except the US.